This is a lecture from Open Tuition. For the free lecture notes that go with this podcast, please visit opentuition.com.
F7, December 2010, International Stream, and I'm looking now at question 4. I've already planned my answer for part A of question 4, and it's in the early recording, the use of the 15 minutes planning time. So the basis on which management of an entity must select its policies and distinguish with an example between changes in policy and changes in estimate, I've already planned the answer for that. What I have to do now is part B of question 4, part B1, part B2 for 5 marks each. Comment on the acceptability of the assistant accountant's suggestion and quantify how they would affect the financial statements if they were implemented under IFRS. Ignore taxation. So, part B1. The company's assistant accountant has suggested 2 areas where she believes the reported profit may be improved. Major item of plant cost 20 million to purchase and install, and that was 3 years ago. So, it costs 20 million. On 1st October 07, it's been depreciated on a straight line basis over 5 years, and the plant is wearing well. And at the beginning of the current year, so the depreciation to 08 would be 20 divided by 5 years. The depreciation to 09, which is where we are at the start of this year, is going to be a further 4. So the book value at the start of this year is going to be 12. The production manager believes that the plant is likely to last 8 years in total from the date of purchase, so it's got 6 years left. 6 years remain, and that's very nice because 12 divides nicely by 6, and so we need to depreciate this year by 2, so the year 10 brings it down to a book value of 10 at the end of this year, having charged depreciation. But it's a change in estimate, an estimated useful life. It's a change in the estimate, and it therefore not retrospectively applied. Retrospectively applied. We can't avoid depreciation. That's not avoided. It has to be depreciated. Calculate it based on an 8-year residual life and no residual value. The accumulated depreciation of the plant would be 7.5. That's 20 million divided by 8 years, which is 2.5 a year times 3. That's 7.5. They've already charged 8, so she's suggesting that we credit the income statement by 500,000 and improve the profits. Well, that's not possible. This is a change in estimate, not a change in policy. So she's just wrong, basically. 2 will be the depreciation for 2010. Her thinking, she's suggesting that it should be 20. Applied retrospectively, it will be 2.5, 2.5, 2.5, and therefore she's suggesting at the end of this year it should have a carrying value of 12.5, whereas at the end of this year from these figures it will have a carrying value of 10. The only possible way in which we can say she is right is that depreciation in 2010 is, according to the above figures, 2 million, whereas under the old method, under the previous method, it would have been depreciation of 4. So this year's profits will be improved as a result of the change in estimate because depreciation is now only 2 instead of what it would have been. 4. But otherwise she's completely wrong. And then 4.2, question 4 part 4b2. Most of Tunshall's competitors value their inventory using the average cost method, whereas Tunshall uses first in, first out. The value of inventory on a FIFO basis is 20 million. That's now at the balance sheet date, but on the ACCA basis it will be valued at 18. By adopting the same method as competitors, the assistant accountant says the company, that's not really, I mentioned in the plan, that's not really a sensible basis. This change in estimate, just going back up to B1, the change in estimate appears reasonably based. To be reasonably based on the production manager's assessment, on the assessment of the production manager. And these estimations should be carried out each year by the directors or delegated down. These estimations should be reassessed or reconsidered every year just to make sure that they are still valid estimates of a realistic estimation of useful life. And so I think part B1 is acceptable, the production manager and the 6 years remaining useful life, I think those are. But part B2, a change just because others are doing it is not really acceptable. And remember, in the plan I said you can only basically change an accounting policy if there's more relevant and no less reliable, or the other way around, more reliable and no less relevant. And the other possibilities are if there's a change in legislation or there's a change in accounting standard. There hasn't been in this situation. Possibly she could argue that it's more relevant and no less reliable, or more reliable and no less relevant, but that doesn't seem to be the basis of her argument. By adopting the same method as its competitors, the assistant accountant says it would prove. Now there's also rather a worrying thing here, that she's suggesting that 20 million now would move to 18 million if we valued it differently, but a fall in stock, a fall in inventory, automatically leads to a fall in profits because cost of sales goes up. Let me remind you about the cost of sales calculation. It's calculated as opening inventory plus purchases, the basic cost of sales calculation, minus closing inventory. So I've put some figures on here. In fact, we can do it, can't we? Inventory was 15 million. Let's say purchases were, let's say they were 100. That would be 115. And closing inventory is 20. So cost of sales would be 95. Now if you reduce this 20 down to 18, and I'm not finished because this will also change, that gives me 115. Closing inventory she wants to bring down to 18 will give me a cost of sales figure of 97, which clearly leads to a fall in profits. So she's wrong there, but she's also wrong in another way, and that is that a change in policy, rather than a change in estimate, a change in policy is retrospectively adjusted. Let me spell retrospectively correctly. Retrospectively applied. So not only would we have to change 20 down to 18, but we'd also have to change this 15 as though the policy had been applied since time immemorial, since the company had ever existed. So we would need to, if it were accepted that we should change from FIFO to AFCO, then we would need to go back and restate last year's profits by adjusting this 15 million, and it would need to be reported as 13.4. So 13.4 with 100 purchases will give me 113.4, but of course you see that has reduced the cost of sales, that has increased the cost of sales. So it's only the net adjustment which is going to have an effect on this year's profits if we allow this change in policy to go through. So 18 comes off that, and that will give me 94.6 instead of 95. That was the original. That's on the FIFO method. That's on the ACCA treated correctly. So it only has an effect of 400,000. And in fact, it's a declined effect. That's cost of sales as an increase in profits, because increase in profits by applying. Is that right? Cost of sales is 94.6 instead of a 95. So there's an increase in profits by 400,000 by applying ACCA in place of FIFO. But as I say, that's a very doubtful reason to change an accounting policy. It's not an estimate, it's a change in policy, and it needs to be retrospectively applied. And then finally, I also planned question 5. I'm just looking at it now. Explain how the decision to close the furniture making operation should be treated in Manco's financial statements for the years September 10 and 2011. Your answer should quantify the amounts involved. Now I did that, but I didn't particularly make a specific point of saying for the year 2011. So I'd need to go back to my plan, which I did during the 15 minutes reading time for the exam. I would need to go back to that plan, read the question again. I suggest you do this. Read all questions in your 15 minutes, just the requirements. So you get a feel for what's in the exam. And then within the 15 minutes, plan the written bits, the written parts, so that you've got something to say, you've got something in your head, so that when you do get to the question, you've already made a plan. Plan the written parts, and then eventually you'll get to the written parts. And when you get there, I suggest you read again the requirements to see that your planned answer successfully addresses all parts of the question. And in my plan, I didn't particularly make sure that it addressed all those parts. I didn't specifically identify the effect on the financial statements for 2011. I did quantify, I've done all of that. I did say how the figures will be provided and where they would appear, and the fact that the 200,000 retraining was a cost of the ongoing business activities, the ongoing operations. So I don't think I would have lost too many, but I've got the time now. I'm going back now in this 18 minutes that I've got to answer the Manco question. I have the time to just make sure that I'm in the position to be able to properly answer the question. So read again the requirements, amend if necessary the plan, and then write. Now, you may or may not find that you're writing for, or that you finished your writing within the 18 minutes of the exam time allocation, in which case, possibly if you have time, read the question again to make sure that you've properly answered all the bits. Read the questions, not just the requirements. Oh, let me put that in. Read the detailed requirements for the written parts. So you've read all the questions first of all, then you've read the detailed elements, then read again, having planned your answer, read again the requirements to make sure your planned answer successfully addresses all parts, and if there is time, and quite frankly there shouldn't be, but if there is time, then when you've finished writing, go back and see if you've missed anything. Go back and see if there's just one or two more points that you could squeeze in. That one or two more points, there must be people out there listening to this. There must be some of you who've failed one of these exams and scored maybe 47, 48, 49 even. And that just that one or two more marks in a written part, or any part quite frankly, in a written part of an answer, could possibly have squeezed you through. There are many students that I've come across over the years who say, I failed it with 49, I was so close, I failed with 47, so near and yet so far. And yet, if you just think about that one or two more marks, that reading, making sure, making absolutely certain that you've addressed all parts of the question. And I think that's crucial. I'm not going to write out my answers in the style that a marker would expect. I've got the workings here, I've done all the work, and I've done some written bits in a way that maybe I wouldn't possibly abbreviate that. I would put a change, and I wouldn't write depreciation, or I would write depreciation in full, and I would try to make my writing a bit neater, but it is a little bit awkward on writing on a tablet like this. It's like writing on glass, so it's not ideal. I think something like this, an increase in relevant and no less reliable, I think that would be acceptable. Anyway, I think that will do me for question 4 and question 5. I think that would do. I've got the basis, I think I've got the answers, I think I've got the whole thing reasonably correct. I'm sure that would earn me a pass. I don't know whether it would earn me an Open Tuition Genius Hunt prize, but I'm quite happy to say I would have got a pass with that.